All righty, wake up, Detroit. Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. We've got a great panel this morning. From our office, Lisa Lawson.
Good morning.
Lisa, I'm so happy to have you here. One of the best loan officers in the area. She's my right-hand girl. And, of course, always to my right, Mr. Harry Gland.
Can you say that in this day and age?
Yes, you can.
She is. What you have to say is it's only the truth that she's awesome. She's been around in the business a long time. She's knowledgeable. She puts together great loans. She has great communication with her borrowers and her referral partners. And she just does an overall great job.
I can attest to that.
Those are words. Well, look who she brings in. Dave McLean from Keller Williams out at Lakeside. Hey,
Good morning,
Dave.
Gentlemen. And lady. Thank you for having me back.
Hey,
Thanks, Dave.
Dave, it's always nice to have you in. Of course, you got a lot of expertise in buying and selling real estate out there, and your area has always been hot. Our stats always show that Macomb County is always rocking. We have as much business in Macomb County as any county and across southeast Michigan, and of course, it's great to have you here. So thanks a lot.
Thank you very much for having me.
Crazy hot out there, Harvey.
Yeah, there's a lot.
People don't understand. I mean, drive along 26 and Mound, go down and go down to M59, take it over, go east, go up. I mean, it's phenomenal out there. Now, traffic's a little crazy. Everybody says the west side traffic is nuts, but go out there, right, Lisa?
It's a little crazy, yes.
Yeah, and the area's great. New construction is booming out there.
A lot of new construction.
We're seeing a lot of business out there, and quite frankly, the last 4 or 5 years, Macomb County has been the star because there are a lot of people that are building. Home values in Macomb are very, very high.
Absolutely.
And it led our Tri-County area in the last couple of years. So we love it out there, Dave.
Oh, yeah. Just I was out the other day in 28 and Mound area. The amount of new homes and beautiful, gorgeous, huge, at least $500,000 homes popping up like nuts.
Yep.
Tons of new subs. Gorgeous homes.
Feels like it's 2000 again or 2002.
Oh, yeah.
Well, good for the next generation looking at purchasing those homes. We'll show you ways definitely to get the mortgages approved. And if you're thinking about new construction, definitely call Capital Mortgage at 1-800-LOW-RATE. That's 1-800-569-7283. Of course, you need a strong approval letter, a game plan. Sit down with the real mortgage professionals. We'll show you exactly how to do it all. And there's a lot involved, especially in new construction. And, of course, Dave, in today's marketplace, that's a lot what's going on out there is people are overbidding on homes. The lack of inventory has really caused this aggressive market that we have.
Oh, yeah. The amount of homes on the market or homes for sale in March, just compared to, say, 2016. I have the numbers in front of me because obviously March ended 2 weeks ago. 4,711 homes were on the market in March 2018. Over 7,000 was 2 years ago.
Oh, okay.
Like
so extremely low. So when you talk about bidding war, of course, it's even more prevalent and a bigger issue now than when we were talking about it a year ago, 2 years ago.
Right.
So,
Absolutely.
yes, still a thing. Strong approval is definitely huge because on every bidding war when I'm a listing agent, I'm contacting, if we have 15 offers, I don't need to call every loan officer on 15 of them. But if I'm going to be presenting to the seller, top 3, top 4, whatever offers, I'm in touch with each one of them loan officers and having someone that I can call that's answering the phone, personable, and can tell me that they 100% are confident with the buyer, that they've approved them to the fullest extent is a fantastic thing.
Yeah,
so how does that conversation go? Let's say you call somebody up that maybe you've heard of them, maybe you haven't heard of them, and you see you have your your seller, you have an offer, the offer comes into you, you take a look at it, there's a pre-approval, it's somebody that you don't know, and what do you do at that point in time? You pick up the phone, you call them, and what do you usually ask them? What do you usually hear on the other end?
Well, what's sometimes terrible is, 9 times out of 10, I go right to voicemail because it's not a call they're expecting, and I say, I'm calling about your client, so-and-so. They submit an offer on my listing at, whatever the street is. Give me a call back to discuss. They usually call me shortly afterwards. There's certain things, obviously, you guys know that you can't disclose to some random listing agent that's calling you, but they can assure me that, yes, I did receive all their documentation I requested. The only thing that this would be contingent upon is, no change in their income, satisfactory appraisal, and, no other hiccups coming up, clear title. So just touch base with them, make sure that they've heard of the buyer.
Now, what's
John
refreshing
Smith,
to me,
I haven't talked to them in 6 months. I'm like, well,
what's refreshing to me, Dave, is that that there are certain things that we can't say.
oh yeah,
Correct.
Okay, that if you call us up or somebody up, that you should be hearing this. Yes, I ran them through DU underwriting. I looked at their financials. I've got pay stubs. I'm very confident in this, and we did our due diligence, and we have everything ready to go.
Yeah, if they say,
That's
I
what
talked
you
to them
wanna
one
hear.
time and their credit's good, but I haven't received any of their documentation yet. Well,
That's a whole different ballgame.
Right.
yeah.
Definitely not as strong as offer.
Yeah, no.
Well, good. I just want to make sure that everybody out there knows that there are certain things that people can ask, and there are certain things that we're not going to say.
Correct.
Yeah, oh, yeah.
So
Yeah.
it's refreshing when Dave comes on in the conversation. It's always great with Dave that he knows this, but he's a professional, and he can hear in somebody's voice if somebody's hesitating or they're unsure, they're inexperienced, or they're not doing the right things, or at least articulating properly what's supposed to happen from that point.
Oh, yeah. And when I send over an offer when I'm acting as a buyer's agent, right in the email, I say, and feel free to contact Lisa Lawson at Cabot Mortgage Funding. She'll be able to, confirm my buyer's attached pre-approval letter and, assure you that it'll be a smooth process from here on out. If you have any question, here's our number. So that listing agent can contact her and she'll answer the phone. I always text her and say, hey, heads up, so-and-so might be getting a hold of you.
And that way I know it's coming,
Yeah.
so we can make sure that it's a smooth transaction and nobody's waiting on anybody to get a response back.
And it's always nice when the reply email is, I received the offer, and oh yeah, I've worked with Capital before.
Yep.
Yeah, that's always a good one too. I like when the communication is open lines.
Yeah.
And I think
Oh,
the
yeah.
key with any transaction, especially in real estate, it is the open lines of communication.
Oh, definitely.
All parties are able to talk to each other, answer phones, return calls quickly. Like you said, put the call in. I suggest that any agent that they accept an offer, go ahead and call whoever's giving that approval letter and make sure you touch base and talk about those 3 or 4 different important issues. Their credit, have you run it through the DU? Do they have the funds to close? Are we going to be able to wrap this up in 30 days? And that's what your sellers want to know.
Exactly.
There's no doubt that looking over the recent sales is the key to knowing, really understanding the comps. It's crucial. And also understanding the seller's motivation if you're a buyer. In this type of bidding war situations, those things really come into play. And the more information you can find out about the seller, if they need to stay there for another 3 months.
I was just going to say
they
that.
might want to stay for 6 months if they're building a new construction house.
Possession negotiable in the contract. Well, I'm not just going to send over a purchase agreement that says they want keys at closing. Contact the listing agent and say, hey, we would like to make this the most appealing offer. In other ways, other than just the purchase price or loan type. If we can't change the loan type and they're not willing to change what they want to buy it for, we can deal with a couple other things. How about are they building a home? Do they need 3 more months to be in this one? All right, well, hey, my buyer might be able to give them free occupancy for a month or two.
I'm glad you brought that up. Will you go ahead and call the listing agent immediately and say, hey, look, obviously I got a lot of interest in your house. What are you guys looking for? Will they share that information with you, and do you share that
most of the
with
time,
the other agent? Yeah.
Oh, yeah. Most of the time they do, and I share that information, the information that I can disclose, because some agents will call you and say, how many offers do you have and what are they? Well, I can't tell you that. What I can tell you is I do have 2 offers on the table. I'm meeting with the seller tomorrow morning at 10 a.m. If you'd like to submit something, please have it to me by then.
Yeah.
So,
That's
Dave,
it.
we talked about it last week on the show and in previous shows, is that when you're taking a look at an offer and you're weighing out offers and you see an offer in there right now, everybody assumes when you sell a house, when you buy a house, that the seller wants to get out right away. That's not the case right now with lack of inventory.
No,
so when you're looking at an offer,
they have to go somewhere.
yeah, you're probably looking at a situation where you want your seller to be able to stay in that house for a longer period of time, not a shorter period of time.
Mm-hmm. They want whatever's going to make it most appealing for their next move.
That's
Whatever
right.
makes the most sense for them. So if it does make sense to sell the house, be able to deposit that large chunk of change into their account, so then they can make the next installment payment on their new build or something that it's going to be closing in 60 days or whatever.
Good point.
That's a big thing that could help them out. So yeah, and that right there could be worth them taking a $1,000, $2,000, $5,000 less offer.
Sure.
Because if it's if the one that's offering the most wants the keys right away, but they really would like to be able to stay in the place for an additional 60 days or whatever the case may be, if the numbers pan out to be worth that little bit of money, then they can
The
choose
hassle of moving
do
or
whatever
paying
they
for
want
hotel.
at that point.
Right. So here's what we're not hearing much anymore. Hey, can you close in 21 days? Can you close in 30 days? Can you close in 17 days?
Right.
No, why are you going to close in 21 days if the seller has nowhere to go?
Correct.
So we're not hearing that much anymore. Is that
Nope.
it?
It's very true.
Alrighty. Hey, it's going to be a great morning this morning. Forget about that weather. Get out there. We're Michiganders. We can handle it. 9:12 if you're just turning in. It's the Hardcore Mortgage Show. We'll come back with all your questions. 248-539-9797.
97.1.
It's unbelievable.
The Metro Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Core Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. 1-800-LOW-RATE, the best mortgage banker. That's where you want to call and get a real approval letter, the approval letter that'll get your offer accepted. That's right, 1-800-LOW-RATE, the best mortgage banker. If you haven't refinanced, boy, John Colbar, these interest rates, it's still at all-time lows, and so many opportunities out there for families to consolidate their debt. Again, all-time highs when it comes to equity, billions of dollars across the United States. Now's that still that opportunity, and if you have maybe an interest rate that you haven't refinanced yet, just by knocking down the term and consolidating debt, you could save hundreds and hundreds of dollars and really set yourself up for success moving forward. And we see so many also, John, families getting rid of the mortgage insurance, getting rid of PMI and MIP.
Oh, yeah. I can even just talk from a personal experience. We just, after being in a loan for so many years, going from a 30-year to a 15-year, and with how good the rates are, it only increased my payment by $100 a month.
Favorite product.
Right.
Good job.
And now you're going to, I shaved 8 years off the loan. The payment only went up $100, and I'm going to pay it off sooner. Oh, all day long. Yeah.
So you saved hundreds of thousands of dollars doing that.
Yes.
In that 8 year
with
period of
Capital
time.
Mortgage Funding.
Oh, well,
did your own. There you
I'm
go.
just saying, financially, it's a good move. You can go from a 30 to a 15 if you know you're going to be in the house. You know you're going to make that payment. You build the equity quicker. You're going to pay off the loan quicker. And people, you have to understand, when you take a mortgage out, the object is to pay it off.
Absolutely.
Right? Probably the worst mortgage guy in the world. I want everybody to have zero mortgages. Pay off your loan.
Yep.
Okay?
I agree.
And
We'll find another business of theirs. Everyone pays it off.
But people, people's behavioral pattern, Harvey, that's never going to happen.
Let's just sit here. It's sort of a reminder of what went on. And, of course, you guys remember, Kevin, not too long ago, of course, in our industry, 2007, 8, and 9, there was a big-time recession. Families were getting really just debt-heavy. It became a thing where they had equity in the early 2000s. They were coming and getting cash-out refinances. Probably pretty much the reason why appraisers are a little bit more on the conservative side. People were pointing at appraisers back then, saying, well, you over-appraised my house, and I took this money out. Well, the truth is, you did take the money, you were consolidating debt. It's sort of
We assume that young athletes are healthy, but there are hidden dangers that aren't screened for in regular physical. Every student athlete should have a healthy heart check before participating in athletic activities. Unfortunately, cardiac screenings aren't always covered by insurance, and not all families can afford it. If you make a donation to 97.1 The Ticket Student Heart Check Program, you'll be paying for one young athlete to have a healthy heart screening, and you might just save a life. Donate today. Go to 971theticket.com and search Student Heart Check.
The Tigers, Red Wings, and Pistons all play here. 97.1 The Ticket.
All right, welcome back to the show. 9:17. We cannot say it's one of those great days, Dave McClain, to go out there and look at a house, but you definitely get your approval letter first.
Definitely be able to check for a leaky roof today,
Absolutely.
or a leaking basement.
Always positive.
Today,
Stay right out
tomorrow.
there.
But if you are out there today, you're serious. If somebody
Absolutely.
lets you in their house to show the house, they're serious about selling it. If you're out there, you're serious about buying it.
Correct.
Take your shoes off.
And Dave's serious about working. Let's face it.
Take your shoes off at the door for sure. Definitely get that approval letter first. Sit down with a real mortgage professional, Capital Mortgage Funding, 1-800-LOW-RATE. You're going to find a full staff all weekend long. And that's the thing. We'll give you that opportunity. It's all about knowledge, education, and setting yourself up to be a successful homeowner. And that's the key about it. Let's move off to Mike Tomchek, who called in. Mike, thanks for taking the time this morning. We're going to, thank you. Got you on the board, too. Hey, Mike, good morning. Welcome to the show. Mike, you there?
Hello, Mike.
Oh, you can plug him in here. We'll try.
In regard to
There you are.
the conversation you're having about shortage of inventory.
Yes.
Yeah, let's go.
All right, beautiful. Great topic for right now. I wish Alex was there right now. He loves to say that there's not a shortage of inventory, that there's a shortage of good inventory.
Yeah.
I'm going to have to go ahead and say that's not accurate right now. There is a pure shortage of inventory right now.
I completely
Okay.
agree with this.
The last, I would say, probably 7 or 8 appraisals I've done, we're looking at maybe 1 or 2 for sale and 24 or 25 sold in what I would define as the market area for the particular subject.
Right.
What that's leading to, and this is the main part of the topic, is, and you guys can address this once I'm off the phone with the real estate agents there, is tons of offers over list price and consequently also over market value.
Right.
Okay. Getting tons of them here. I just simply wanted to point out on the appraisal side of it, you guys can buy a house for whatever you want out there, but do not think that the appraisal value is necessarily going to come in. And also, I get this comment all the time. You're telling me that they cannot buy it for that, X amount of money. No, I'm not telling you that. You could buy it for $1 million if you want to. I'm just suggesting to the lender that they not lend on that amount of money.
Right.
Great point.
So let's go over this a little bit slower so everybody understands out there.
Okay.
A lender is going to lend on what you bring the value in on. If a house, just say, is up for sale and it's a $300,000 listing and there are multiple offers and somebody decides they're going to pay for purpose of this conversation, $315,000.
Perfect.
Okay. And you go out, appraisal's ordered. Dave sold the house. They've got the agreement. The order comes into us. We've got our borrower all lined up. We've already told the borrower, chances are in our 4, 5, 6 months of working with the borrower, hey, listen, go out and find a house, but there is a chance in this market that you could overpay. That's okay. I'm good with it. We go out, Dave sells the house for $15,000 over. You bring the appraisal in right where it should be, values at $300,000.
Yeah.
That probably should be the end of the discussion because we're going to lend on the $300,000, not the $315,000. So what we're finding, however, and this is the question I asked Dave a year ago when he was on the show. I ask every realtor on it. You brought it in. They're going to say to me one of three things. Harry, that's a bad appraisal.
That's my favorite.
Okay, that's a bad appraisal. Harry, I want you to rebut that appraisal because it should be higher. It should come in at $315,000. Or go to another lender and get another appraisal.
Useless.
So
That's the beauty.
and by the way, we all know, Mike, you can verify that. So I asked Dave, you're a very knowledgeable guy. What do you do? And Mike, stay on the air. Stay on the phone here.
I will.
What do you do in that situation,
On
Dave?
that house, I would have told my buyers, here are the comparables. Here's what it's valued at. The listing agent was accurate when they listed it at $300,000. I think it's going to appraise for $300,000. You can offer whatever you want. If you're going to go over, though, it's most likely going to appraise for that $300,000. If it doesn't, you can agree to pay a certain amount over, but that we would have to stipulate as, you agree to pay X amount of dollars over the appraised value. Having them know that ahead of time, because there's some agents and some buyers out there that think, well, if I offer $25,000 over, they're going to take mine because it's the highest. Well, no, highest is not always the best offer. So there's other things to utilize, other tools to utilize to make yours the best offer, like we were just talking about before the commercial break, regarding the occupancy, regarding, you do a larger deposit, a shorter inspection period, bringing that cash over the appraised value, but having those certain things in there that make you more competitive. But I would know ahead of time what the value of the home is and educating that buyer on that. So when they do find out that, they were expecting it.
When people suggest to go to another lender, you just looked at me and said useless.
Because
the comps aren't going to change with another lender. The comps are the comps.
And with that,
Mike? Isn't that right? Comps shouldn't change if somebody decides they want to shop appraisers, right?
Oh, geez, man, no, absolutely not. It's worth what it's worth. It doesn't matter what lender you're going through. It doesn't matter what the offer or the purchase price is. What matters is what the darn asset is worth. That's it.
There you go. So now let's get really boring for a second. I have to ask this question. Mike, procedurally, when we go ahead or a lender goes ahead and says, you know what, I'm going to do this anyways, I'm going to rebut the value and I'm going to go ahead and request a rebuttal, go through the rebuttal process, and when you get something like that, other than roll your eyes, shake your head, and maybe go a little bit internally crazy, what procedure do you have to follow?
Well, the very first thing that I will do when I get that is I get up and I walk out of the room and I take a break and I do something else first. I do not respond to that right away because you're absolutely right. I do want to lose my mind for a second. Then I come back and I respond to it just simply using mathematics. Really what I found is the best way instead of writing a narrative, which I have already done in the original appraisal report anyways, is just simply point out this is the facts. This is the math. You cannot dispute it. I'm using the most comparable sales available, overlooking those comparable sales in an effort to use other comparable sales to increase value. It goes against everything we believe in and doesn't produce a credible result.
Yeah, and don't get me wrong. We have had, I've had bad appraisals, and Lisa and I have had bad appraisals happen together. And then we have submitted, comparables that the appraiser blatantly said, I didn't see that one.
Yeah, or they completely missed it.
So in that case, it could work.
It can happen. It can happen.
Right, we're all human. We're not saying it doesn't ever happen, but it's not the norm.
But I think the best thing, the way to approach it, and Mike, correct us if we're wrong, is that when a realtor like Dave does give us comps, and we go ahead and we do submit them, that there is a reason why you can use them, and there's a reason why you can't, and then it's all in the explanation. And like you said, it's all in the mathematics.
Yeah, absolutely. No question about it. Really, the most important thing here, why I even called, is more of a public service announcement. Like, hey, guys out there that are listening, be aware that this very well may happen, and make sure you talk to your realtor, because that's why you have them, about this particular situation, and be prepared that, hey, just because you want to offer something, that doesn't mean that that's what it's worth. I know you learned that in economics class, but that's actually not the case.
Mike, we're going to let you go, I think, and enjoy your life.
Awesome, man.
But we appreciate the phone call.
Congratulations on the twins.
Thank you.
Pretty awesome. You got your, no pun intended, but you've got your hands full, brother.
I sure do.
All right, Mike Tomczyk, Paramount Appraisals. Thank you for calling in, Mike.
So the reason why we do that, and the reason why we have Mike on there, and Mike says it's a public service announcement, it absolutely is. We just want to educate people out there. There's nothing wrong if you want to overpay for a house. There isn't anything wrong with it. And by and large, if you spend $5,000, $10,000, $15,000 more and you're going to be in that house for 7, 10, 12, 15 years, okay.
Yeah, you can make up that equity.
Yeah, why are you going to go ahead and lose a house if it's a quality of life issue? If you want to be in that house, you love the house, you love the area, you like the school district, whatever it is, okay.
It depends, but don't think that you're also going to pull a fast one on the listing agent or the seller by offering more than it's going to come in at.
Good segment. Thanks to Mike Tomczyk.
All right, very good segment. Hey, put a few extra dollars in your pocket. Give yourself a little wiggle room. When we come back, we'll talk about you getting your offer accepted. 248-539-9797. We'll be right back.
Hi, Harry Glantz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
All righty, welcome back. We're in our last segment here. Keep it on 97.1 all day. We got Tiger Baseball coming up at 2:10. Jim and Dan with the call. It's going to be exciting stuff for sure. Of course, we got Pat Caputo coming up with sports right after us. 248-539-9797. We'll take all your calls here on the Hardcore Mortgage Real Estate Business Show.
Pistons won last night.
All right, we got good things. Got the last Red Wing game down at Little Caesars Arena tonight. Get down there if you haven't checked out the arena. The Wings are going to be pushing around the Islanders, hopefully. That'll be good news. And, of course, we got a lot more of real estate here with Kevin Stewart. Kevin, it's we got some calls to get to. Let's actually go out to Todd in Commerce. Hey, Todd, you're talking about the process of buying a home. You need some advice. Go ahead. Tell me some of your questions.
Yeah, good morning. Hey, we're in the process of closing on a home. We sold our house. In 2 weeks, we're actually closing on our home. It's an older home that was remodeled. We had it inspected. I'm concerned about it's on a well, septic.
Yes.
And talking with my agent, we've gone through the inspection process. My gut is telling me more and more to actually get the well inspected by a certified well inspector. I just wanted to kind of know if we find something. My agent said we can't go back to the seller. What are my legal ramifications if we do find some issues with the well when we're in this late stage of the game with buying this home?
Well, you can definitely fix it. It could be a chlorinating of the well. Sometimes that's one of the problems that comes up on the well. So, again, you said the seller, but you meant the buyer.
Well, we're not attorneys and we don't play them on the radio, so you probably need to seek legal counsel on that. However, if you have it in your contract, I don't know how far you are in, did you have a contingency that if the well wasn't in operation that you could go ahead and cancel a transaction?
No.
Okay, so, I mean, I'd have to read the contract. Again, I would tell you should call a real estate attorney and have them look at the contract. How much earnest money deposit did you put down?
$5,000.
So you put down $5,000. In the contract, does it say if you don't perform, you lose the $5,000?
Yes.
Well, that could be an answer.
On your radio and streaming worldwide, we show the world what Detroiters are made of. 97.1 The Ticket.
All righty, welcome back to the show. 9:31. Kidding me? It's gorgeous outside. Get on up, Detroit. 248-539-9797. Call the Hardcore Mortgage Real Estate Business Show. This is where you'll get your information. Going to save a lot of money if you're out there trying to purchase a house. We're going to give you some additional information here. Get your offer accepted. And again, we've got some good calls here. 248-539-9797. Or get that approval letter at 1-800-LOW-RATE, the best mortgage banker. Lisa Lawson from Capital Mortgage joining Harry and myself this morning. It's great to have Dave McLean in from Keller Williams Lakeside. Yes, thanks a lot, Dave. We have a lot of conversation on the breaks, and I'll tell you, if you want to buy a house, this is why you give us a phone call. Let's go out there to Scott in Novi. Good morning, Scott. Welcome to our show.
Thank you. My question is regarding a gift of equity.
Yes.
I am the sole heir to my parents' estate. I have no brothers or sisters, and I have 3 adult children. And the adult children decided which one of them would purchase the home. Dad and I talked way before he passed away, because I lived with him the last 5 or 6 months when he was critically ill. We're going to value the house at $90,000. Now, speaking with a representative at manufacturers who my daughter is going through to get a mortgage, I said that the different websites and publications that I've looked up right now, the value of the home is around 108 to 110, according to the different websites. And she immediately said, consider a gift of equity. My daughter has the 20% down to qualify for a good standard mortgage, but it was explained to me that the difference of 108, if it's appraised at 108 and 90, is $18,000, and she would not have to spend her $18,000 if I give her a gift of equity.
Yeah, that's correct.
Could you explain that? Would there be any cash involved, or is it just the value, the appraised value of the house versus the sale price?
Yeah, there's no cash involved. She could actually hold on to that cash. And in essence, you're gifting the equity that's in the property, that 20%, to the daughter. So the estate would gift it to her. She could literally walk away from that table buying that house with no dollars.
Well,
that's right.
Now let's talk about a little bit, Lisa. Of course, we got now some closing cost. Those she could pay for, or we could actually gift those also.
You could gift those also. Actually, I did one last year. We literally gifted the closing costs, escrow setup, and the down payment. The father did the same thing, actually gifted this property to the daughter, and I think she paid $42 at closing.
Yeah, so basically what you got here, Scott, is 108 minus 20% is your loan amount, and then we could do the closing cost, and prepaid could be paid by the seller. Whatever that difference is, minus the fees a seller has to pay, is just the transfer tax. Because you're selling to a family member, potentially you might be able to waive the transfer tax also in the state of Michigan. So other than the title insurance, a standard closing cost, it's a great opportunity for her to keep all of her money in her pocket. And that's key, especially with younger folks. Keep the money, use it for other things in life, including paying off some other debts.
That's right. And that money comes out of the inheritance money that all 3 split. So when this was presented to me, the only thing I couldn't get quite through in my mind, even though I read a lot of things, am I gifting her dollars, or is it the equity? And I thought it was the equity, but I couldn't get a solid answer, and you guys provided it.
It's the equity.
Yep.
It's
It's a great loan. It's a great opportunity for her. And of course, I'm going to call you after the show just to see if we somehow could do the transaction for you and show you how to do everything. We do right up,
or at least advise and consult.
Yeah, we can definitely give you good information. So thank you. It's a great call. And for anyone out there in that same situation, Scott, thanks a lot again. Definitely give us a phone call. If there's already built-in equity, you can gift it to your family members. And now, the best thing about it, Lisa, is one of the things. Now there's 20% equity. There's no mortgage insurance. So whether it be an FHA or a conventional loan, you don't have to pay. In this case, of course, it's a 20% down, typically conventional mortgage. So fantastic. Great way to do it between family members. And I said, I did mention it. Check it out with the title company, because if it's family to family, a lot of times they'll waive the transfer tax. So
yeah,
there's
federal
a lot of opportunity.
Transfer tax doesn't apply, just state.
Great. And then you just have to pay your title insurance, the other thing.
$8.60 per thousand. So that's a good saving.
Great way to buy a house. One of the things we were talking about is the lack of inventory, and then having some additional money and sort of getting your offer accepted. At the end of the day, though, as a buyer, Dave, and I wanted you to maybe to discuss this, is really to have your absolute max figured out. You have to sit down. Your agent has to have an exact plan of really the dollars you have, if you have a little extra money to work with. If you don't have extra money to work with, you definitely need to share that information with the selling agent.
Definitely, and knowing your options also, because Lisa and I had recently a client that could get gifted funds. His mother had mentioned to him that if he did need something or wanted to increase his price range, that she'd be willing to give him a gift. So there are those options also. So it's not just your personal finances. Something like that could happen for assistance with your down payment. Also, when you said knowing your client's max, more times than not, it's your client's comfort zone and what they want to be at and what their payment amount wants to be and what they can afford comfortably. So they can be approved at $300,000, but maybe the house for $225,000 that has taxes of $7,000 a year with homeowners insurance puts them at a payment that they want. Maybe if the house had $3,000 in taxes a year and it was $300,000 house, then they could, the payment would be different. So all based on what they're comfortable with and what they want. Because,
And a
And
payment that's not going to go ahead and wreck their lifestyle. You don't want to be married to a house payment. You want to be able to lie, and that's the great point.
There's
Dave,
a lot of brand new houses out there that don't have a lot of furniture in them.
Right. You want,
curtains.
it's interesting. Yeah, but they're playing cool little hockey games in their living room.
Yeah.
But you want to be comfortable with going ahead and lying down at night, putting your head on your pillow, and being comfortable with what your monthly payment is.
Yep.
And you don't want to go ahead and upset your lifestyle just to have that. So
That's why walking out of a house that a buyer's interested in, that we know we're going to submit an offer on, first thing I do before I start the car is I send the listing ticket with the current taxes and everything on it to Lisa so she can work up estimated
Numbers,
closing costs and payments for them.
And say, this is what you need to close. This is, and it also helps us facilitate negotiations because if they're $1,000 or $2,000 short, we might work this all out. I can be like, Dave, they really want this place. Is there any way we can get 1,000 in concessions or two? I mean, it might just be a little short, and
or after they see the numbers, they say, you know what,
early.
let's look in a different area because I just realized that I want to be about $200 less on the payment a month.
Right.
Okay, well then that's fine. We realize that right off the bat.
just because somebody thinks they can afford something doesn't necessarily mean they should buy it.
No,
Correct.
definitely
You
not.
don't want to be house poor. It's not worth it.
There you go.
Definitely not. Boy, we have some amnesia going on definitely around here. There's some tough times we experienced across the United States, but more specifically here in Southeast Michigan with the automotive industry in 2006 and 7 and 8. People are being laid off. Those times, it's like it never happened. 2 decades later, here we are. Prices are at top dollar again. Some places around the country, man, they had actually, if you bought a house in 1998 in Seattle, 20 years later, it ends up being worth. I mean, these numbers were. They just had a couple facts out. Buy a house for $200,000. It's almost worth $700,000.
Amazon.
10 years later. So again, a lot of opportunities in real estate here. Definitely, the values are back up, which leads to a lot of our families, Lisa, calling us back who just bought in 2 and 3 years ago, and they're looking now to refinance and pull some equity out to do those home improvements.
Correct.
Maybe pay off those student loans and a lot of bad debt, toxic debt they might have accumulated over the last few years. So great opportunities out there. If you haven't refinanced your house, if you're thinking about that home improvement project, call Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Let us go over all the numbers with you. We talk about pulling up to 20% of the equity out of your house. There would be no mortgage insurance. And a lot of the families out there, not only can you refinance, pull some equity out, you might be able to drop 5 or 10 years off your mortgage payment and really set yourself up for the future. So just great opportunities out there to still refinance your mortgage. Again, drop the term, save a lot of money, save a lot of headaches. By dropping the term, you're going to save a lot of, take a lot of years off, not only the mortgage, probably off your stressful
improving
life.
their cash flow too. I mean, I just had a gentleman who was on a fixed income, and he called, I believe, 3 other lenders, and they were unable to help him for different reasons, mostly debt to income ratio. They're like, you can't afford to get you more money. We can't do cash out. And so we sat down, and I understood his entire situation and what he was doing. He needed a car. His car, was older. And I said, well, we'll do a cash out refinance. And instead of doing a home equity line of credit as a second line and increasing that debt to income ratio, we actually gave him $19,000, and he lowered his payment 60 some odd bucks.
There you go. Or here,
so
like we were
now
talking
we've improved his cash flow, and he's got cash to buy a car. So sometimes you just have to sit and listen to what their real need is, and see if there's an alternative situation or alternative solution. To fix it. Doing a home equity line of credit for that guy would have never worked.
Nope. Your experience and expertise, and anyone out there in our industry that has that type of experience and expertise, it's everything. It means everything to the consumer out there. That's what the show's all about anyways.
Making sure that the money that you wanted to pull out to put into the home, talk to your agent and your loan officer also to make sure that that money is going to get you a return if you're looking to leave the home soon. Because like we were talking about in the last break, Harvey, if you're going to put the money into it and you're not going to get back out of it, maybe your best option is look at the equity you do have in it right now, sell
the house,
and go to another one that has the finished basement.
Right. That's a great point, Dave. One of the things is, you might actually get more for your house if you sell it, and then you could use that money to segue into another house versus an appraisal in your neighborhood, just might not pull as much equity out.
A lot of homeowners might not realize what they can get for their home.
Some people are trying to pull out $30,000 to $50,000 to finish a basement. It may be better to sell your house and buy a new house with an already finished basement, because getting the return on investment on a finished basement.
We always say, no matter how cool we think, and guys, we love basements. It's just something we do. We love it. We like going down there. We like being by ourselves, bringing our guys. It doesn't doesn't equate dollar for dollar what you put into it.
So make sure that money
just doesn't.
And I'm glad you brought that up. And of course, we don't have our appraiser on the line but of course, egress windows do make it a habitable space. If you're pulling permits, are going to require, if you're finishing that you go ahead and put the egress window in. It doesn't count as square footage if the walls are underground. That's the key here. But it's definitely a lifestyle. Here you mentioned it, the man caves, the women caves, the
she sheds.
The she sheds. These are all
she shed.
awesome spaces.
What?
Yeah. Oh, she sheds are great. Awesome spaces that gives you an opportunity. Again, that doesn't necessarily count as square footage, but it's a great place to put the kids down or have a lot of people.
That's a lifestyle move. Harvey on a lake, a walkout lower level. Everybody wants to count that as square footage. It is not counted as square footage. It is living space. It's a lifestyle thing. You like it. You'd rather have it. You want it. Okay, but it doesn't count as square footage when you do an appraisal and count as value. But again, I don't think you're ever going to get, and I haven't seen it in almost 30 years, where you get dollar for dollar on a she shed.
Yeah, you're just not going to get that.
Or a man cave in the basement.
Well, we've got tons to share with you. When we come back, again, more home purchasing. Again, we got 3% down. We got VA loans with 0 down, USDA loans with 0 down. Come on back and join us. We'll turn you into a homeowner.
Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
To help purchase a house again, and then there's always gift funds that are available, so lots of opportunities out there for families.
Objectively speaking, I would really take a look at that. I'm not recommending people borrow against their 401k. There are a lot of howevers to that. It can be an avenue, but I don't know that I'm a strong advocate of that, but it's all depending on your situation. I know John feels the same way I do. You say you should always save first. I believe in a 401k. Take the money out of your paycheck. It's tax deferred, and it comes out, in the long run. John's been in our 401k program now for 21 years, and people that have saved consistently and saved for themselves, that's the way to go. I don't know, Harv, if I would recommend it. I think it's up to everybody individually, but it's not a bad thing to look at.
No, you're paying yourself. You can, again, pay yourself back into your 401k.
Right.
So it's a way.
No, I agree. I'm not saying it's bad for everybody. Might be good for some people.
There you go.
But I want everybody to know how objective we are.
Kevin Stewart, one of the things that's also coming up is this lack of inventory. We've been talking about it now for a couple of years, but one of the things too we're starting to hear, and we saw a couple articles about it, is the trust that you have and the communication you've had with your buyers when you're working with professional real estate agents and teams like you guys. They're just putting offers in sight unseen. They already know what they're looking for. They've got their needs list. There's the minimal of homes out there. They're just putting an offer in as soon as the home goes on the market. Could you comment on that a little bit and tell me if you see that could be a position, at least to get your offer accepted and out in front of everyone else?
Can't stand it.
Interesting.
That's my opinion on it. I don't like it only because what it does potentially for a seller is now they take your offer because it's high and it's awesome, and then you walk into the house and then you say, oh, no, I don't really want it. So that potentially can put the seller in a really bad bind. And so I'm a true believer in, we have to also do what's right by everybody and not intentionally do something that's going to hurt our fellow man. I inherently believe in that. And so, that's where I have a difficult time in that. Now, it depends. If let's say you're an investor and you're looking at investment properties. Okay, now that's a situation where maybe that's a good idea. So there's situations where I think that could be used. But, Jessica can speak to this. I mean, you've had situations where you've had buyers that have said, let's just put an offer in sight unseen. And has it ever really gone well?
No, never.
Oh, okay.
Oh, yeah, never.
All right.
So what we do try to do is get a little bit creative. So trying to get the client and do some FaceTime or get a family member out to the property or things of that nature.
Right, so definitely make the time to get out and view these homes.
Absolutely, because you can see it, but you really you can't feel the textures or the textiles or the upgrades that are in the property. And truthfully, you can't get a layout. So again, like Kevin was saying, if it's an investment, that's a little bit different.
Right. Welcome back to the show, 947. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. That's where you're going to find us all week long. 1-800-LOW-RATE, the best mortgage banker. That's 1-800-569-7283. Deal with real people. Get a real approval letter. Yeah, there's reasons why there's mortgage people out there. A lot of good reasons why. The experience of loan officers. We help, Dave, as you know, take away the uncertainty of a transaction. And like you said, a strong approval letter, then you're able to call somebody and there's accountability.
Yep.
And there's honesty. And all these great things take away the uncertainty for the seller. That way they know they can go ahead and move forward and sign a new PA.
Communication is number one, and I am constantly talking to Lisa.
Of course. No doubt. And, of course, you want to deal with people that have a proven track record. Be sure to call Capital Mortgage Funding. Again, you can find our great staff there all week long. And it's just not the loan officer, our closing department, our processors. I mean, top notch. We're getting transactions done. Every purchase transaction seems like they close in 3 to 4 weeks now. So definitely if you're out there in your competitive situation, you want to call the experts at Capital Mortgage. Lots of good things to talk about, Lisa, because there's some great new programs out there.
There are.
One of the new things that I keep running into is, I don't know if this spring is just bringing out, a lot of people are really excited about home ownership, but they don't have quite enough money saved up. And in today's competitive market, it's virtually impossible to get the seller concessions we used to see often.
Correct. So I would say I get calls from especially people who are first-time home buyers, never owned a home before. They're super excited. They heard they could get a house for 3 or 3.5% down. They saved their tax return money, and now they want to go. And they don't realize that there's other fees involved in closing costs and setting up taxes and paying for insurance. And then when you send them an estimate and they're like, well, I don't have the rest of that money, there's often things that we can do to assist them. And one of my favorite programs that I've utilized quite a bit lately is Mishta has a conventional loan that people, it's newer to Mishta. It's maybe not quite a year old.
Yeah, I didn't even know they did conventional because we did FHA.
3% down conventional. So sometimes people had in the past shied away from Mishta. They didn't really understand it. And I think they thought it was always FHA or RD. And they didn't understand the mechanics. Well, so now we have a 3% down conventional. And you can get up to $7,500 towards closing costs, prepaids, down payment. And that can make a huge difference, especially for someone who's only saved maybe the 3% that they thought they knew.
Yeah, and
the
Lisa,
rate is
Mishta does have some income limitations.
They do have, they have some income limitations and some. Depends where you're going to move and how many people are in your family. So, but it's still a phenomenal program. And I've closed quite a few. There's also, everyone thinks that Mishta requires down payment assistance, and that's not the case. So if you have someone who's actually saved quite a bit of money and a first-time home buyer, you might be, single guy or gal moving into a house by yourself, and might be your first job. Ask somebody, obviously Capital Mortgage Funding, how do I get this rate? Because the rates are in the 3s for a 30-year fixed.
And like at the beginning of the show when we were talking about as a listing agent, multiple offers, or just an offer period, contacting the loan officer, that's huge. And especially for some agents aren't familiar with, and then especially the sellers aren't familiar with, the Mishta part of it. So if the pre-approval wording has that Mishta language in it, they are automatically thinking, oh my gosh, this is going to be like another month of the process and big hiccup, headache, issues here and there. So it's beautiful when they can call Lisa and she can clearly explain it to them that it's not that big of a deal.
No.
It's a program offered through the state, and it's
3 to 5 days.
And we
3 to 5
fund,
days. That's it.
And don't forget, we fund it.
Correct.
We fund
Exactly.
it, and it's our money that we're funding it with, and then we get reimbursed. But
Correct.
bottom line is that it's a no. The difference in the transaction isn't the funding of the transaction. The difference in the transaction is who can qualify and the documentation you need to show up front.
So it's nothing to be scared of.
Right. It's all part of the transaction. So
Correct.
it's no different where the money comes from. The money still comes from us.
Correct.
And we still do everything there, the underwriting, especially if there's no DPA.
Right.
But yeah, it's just another way of helping somebody find the best available financing options for them.
And it also helps, I think, in this market where people aren't willing to give concessions so freely.
That's the key, yeah.
Oh, yeah.
If you have a gentleman makes $60,000 a year, he's an engineer from one of the big 3, you know what I mean, just graduated, whatever. That income, if he's moving into a place by himself, would qualify him for that program, and he may have saved his bonus, but it isn't quite enough. You don't have to always ask for concessions. You need to work with experts who understand how to put together the deal for the best outcome. So they actually get the offer accepted.
Right.
You know?
That's a great point. Actually, I've had some VA borrowers in the past call me up, and sure, they're ready to go forward. Veterans Administration, of course, allows you to use your eligibility as a zero-down program, yet they've already saved their money, or they're going to use their funds from another home, and they're already putting over 20% down. So, yeah, another reason why, although a VA loan might look great for somebody, it doesn't in that case because they're already putting 20% down, and potentially they'll avoid that VA funding fee. So, like you said, Lise, the professionals know the difference.
Yeah, because a lot of, like she said at the beginning of it, is a lot of buyers think, oh, I saved my tax return money and I have, whatever amount that I can buy a house for. It's not taking 3.5% of the purchase price times 3.5%, and that's the only funds you're going to have. Proration of taxes are huge. There's appraisal fees, underwriting fees, all this other stuff that goes into it.
Insurance you got to buy.
When they sit down and talk to her and she explains it, then, I get it now. That's why, because I have to pay the seller back for the taxes because they already paid them. That's why I am on the hook for them now, because I'm going to be using the home at that time. So when my garbage gets picked up, I paid for it. You know? So just knowing how the process is huge.
Well, I think it's important to educate buyers as you go along. I can't even tell you how many calls that I get. I just had an agent not that long ago call and say, well, they only have $3,000, but they have this pre-approval letter for $105,000 purchase.
Oh, good.
And I said, well, they happen to know the buyers very well. He goes, where are they getting the rest of the funds? And that is all they have. I said, so they have no other funds, and they they exactly had the 3% that they needed. And I said, well, who's covering everything else? They never had that conversation. That person, those poor buyers had no clue.
Right.
It's about being upfront and providing education throughout the entire process so people can make knowledgeable decisions.
Yeah, so you don't waste time or get the buyer's hopes up thinking that they're going to be able to obtain a home when they're not.
Or getting them under contract and having them waste money on inspections and appraisals, and all of a sudden now we're not doing it. We can't close.
So now of that $3,000, they're out another $400.
Yeah.
Yeah, they definitely want to get that all figured out ahead of time. Again, different components of home ownership, whether it be the down payment, as you mentioned, standard closing costs, and setting up your escrow account with prorations and obtaining a homeowner's insurance policy. It all is part of home buying, and you need to have all your ducks in a row to make sure you're making the right offer. A little bit of back to business going on. Of course, next week is already the 17th, Harry, so if you haven't filed your tax returns, definitely go ahead and do it, especially if you're planning on using this income and you're going to be bidding on houses in the next couple of weeks. You got to have your tax returns in. That way we're able to get the transcripts back and you're able to use that money, especially for self-employed people. If you're having a great 2017, you're going to show some more income. Go ahead and get that done so that your business tax returns and everything's already set up.
Absolutely.
So call your CPA. If you don't have a CPA, definitely call us at Capital Mortgage Funding. We have a list of some of the greatest CPAs across Michigan.
Tax preparers are burning the midnight oil, as you said, Harvey. The returns are due by Tuesday at midnight. And just because you file an extension, that doesn't mean you can't write. You have to write the check and pay the fee, pay your taxes, and then what is on extension is the paperwork. Yeah. The money's not on extension.
Correct.
The paperwork's on extension.
Such a good point.
So people don't understand that. They think that, on extension, I don't have to pay my tax.
Not
wrong.
You pay your tax.
Wrong.
Also,
find your receipts. That's it.
Great point. Also, solicitations out there. Be careful. A lot of strangers. We always say don't talk to strangers. I know your mother
strangers
or your parents
are bad.
Might have told you that when you were a kid, but it works also as an adult here. And there's been some scams out there. I know the news stations are starting to pick up on a few of them. Be very careful. Call Capital Mortgage Funding. If someone's calling you, telling you need to pay for your deed and you just closed on a transaction, there's a lot of strangers out there that are doing some bad things. So definitely be careful. There's nothing wrong with picking up the telephone and calling the experts. 248-539-9797 if you want to sneak another phone call in. Otherwise, you'll definitely be catching up with us at Capital Mortgage Funding.
Oh, there's
1-800-LOW-RATE. The best mortgage banker. And Dave McClain, we want to thank you for always stopping by.
Thank you again for having me, guys.
Right.
And Lady Lisa.
Yeah, we can find Dave out there at Keller Williams out at the Lakeside office. And Dave, always nice to hear about your expertise. Lisa, you got anything to add here?
Stay dry, Sam.
Stay dry.
Stay dry. It's great. All right, we'll be here next Saturday on the Hardcore Mortgage Show. We got Pat Caputo coming up with sports. Keep it here on 97.1 The Ticket. We'll see you next Saturday.